Hello and welcome to another episode of Business on the Wire. Even as industry begins plans and preparations to get back on track with economic activity, there's two sectors that have received such a strong blow. There are question marks on the future of their survival and what form and shape that might take. There's travel on the one hand, there's of course aviation on the other. Joining me to talk about the future of both these sectors is a man who's been on both sides of these pages, Aditya Ghosh, who's the former President of Indigo Airways and is of course now a board member on OYO, that is a large part of the tourism industry. Thank you, Aditya, for joining in. It's been a body blow really for the industry that you represent through this year from COVID. How's business?
So, both. If I talk about the current business that I'm mostly involved with, which is the hotels business, or for that matter, what I spend most of my life with in the airline business, it's definitely the one of those which has seen the most amount of immediate shock, and all across the world. This is, for example, retail has undergone a shock in most countries. But travel, hospitality has undergone a shock, throughout the world. But I have a slightly different view on it. And that is that this is because of an artificial restriction that we have on the industry today. Planes are not allowed to fly, or hotels are not allowed to open up, etc. Which basically means that the fundamental need of the consumer has not disappeared. It is more like a floodgate that is being put, and there is a restriction and there is a barrier. And once that gets removed, you will see consumers coming back. Unlike, for example, a product or a service which was highly dependent on discretionary spending, where you could do without it. I mean, you could do without that, that fourth shirt and that fifth T-shirt, for example, or you could do without probably going to some high-end luxury restaurant and eat at home, or eat at a more reasonable place. But travel is a fundamental need. Whether it is essential travel related to work, or whether it is essential travel related to education or healthcare or whatever. So once that restriction is removed, you will see a temporary surge, and then maybe a long sluggishness, and then a period of recovery. But as far as the current situation, which is the question that you asked me, I mean, business is obviously, there is no business, other than the facilities that we are using to provide as quarantine facilities, etc., to the governments in Southeast Asia, in India, in the United States, etc. It's not like hotels are operating, or for that matter, even airlines, etc., are operating.
That was a sunny side up dose of optimism, Aditya. I have been speaking to scores of entrepreneurs, and I must say that's the first 2 minutes of optimism that I've heard. But give me a more nuts and bolts sense of how bad the business has been hit, because the thing also is for you guys is not just the industry that you traverse, but it's also the fact that you are part of the startup universe, which is kind of getting sandwiched on both ends. On a rough basis, even, what kind of revenue losses are you facing? What have you had to do in terms of layoffs and furloughs in order to just conserve capital? And how much cash on books do you have really? Because I think for startups especially, it's how deep are my pockets? How much runway do I have from here?
Sure. So a lot of questions. So I'll try to answer all of them one by one. As far as business is concerned, especially in the OYO's case, we're not just bound by India, but we are present in about 80 countries around the world. And in that, China is one of our largest market, if not the largest market, in terms of the sheer presence of the number of hotels that we have. So we actually were one of those probably rare Indian companies, or companies out of India, which kind of saw the impact of the crisis much before, maybe about a couple of months before anybody else did. And we have hotels in Wuhan, we have hotels in Hubei. So strangely enough, in China, we are seeing the green shoots of recovery. and about 80% of all the hotels have already started opening up, right? But for example, in India, of course, everything is shut, or in North America, everything is shut. So even in the US, for example, San Francisco saw the most amount of dip, followed by New York and New Orleans. So in terms of sheer revenue and in terms of sheer ARR, and it's probably down about 80%, across. Now, as I said, in China, on the other hand, you're beginning to see that occupancy has started going up week on week for the past about, let's say, 4 to 5 weeks, and even as of about a month ago, the occupancies were up already at about 37 to 40%, and it's climbing. Now, I'll caveat that answer with one thing that none of us, I think nobody in the world really knows what will happen. We are all taking guesses for the future based on the data that we have. Because if there is a second wave, or if the hotspots move within a country, as the labor and population moves, the whole scenario will change again. Now the second bit about the cash runway, etc. I think cash runway is probably the most important aspect on which we are focused on, or for that matter, any industry that I'm involved in. For example, whether it is my investments in fintech or my other interests in various other consumer businesses, we are all focused on making sure that we reduce the variable costs and try to increase the cash runway. As far as OYO is concerned, I think we are at a reasonably comfortable spot at the moment for the next year or so, right? And that's a combination of not only the cash that we already have on our books, but the restructuring that we have done, relooked at our cost structure and so on and so forth. Now, as far as the employees are concerned, right? What we did was that we kind of, for the first almost a month or so, we did not take any actions because we didn't want to take any knee-jerk reactions. The second thing that we have done is that we have tried to set ourselves a goal, which is becoming increasingly difficult, of course, to meet because of the lockdown, continuing to increase. But the second goal that we had for ourselves is to can we make sure that we do not have to let go of people, rather can we put them on furloughs with some limited benefits, right? So what we kind of created a stack of needs, and when we reduced the pay, what we did is we continued to give the health insurance benefits, and we also continue to give the benefits, actually increase the benefits for school fees and employees who have school children, etc. Right. And then we also allowed that additional family members may be added into those health insurance benefits. So we put quite a bunch of people on leave with limited benefits. I was just speaking with Ritesh only yesterday, and we're trying to see how we can increase some of those benefits or tweak some of those benefits to make it a little bit more comfortable for most of our employee base. And there again, a large part of those furloughed employees are, not all of them, but a large part of those furloughed employees are operating teams who were operating in the hotels, and if those hotels are shut and they are not operating, there is no work to be given, there is no work to be done. So we kind of try to focus on a very sort of granular level as to how we treat it, with the overall goal that can we increase the cash runway for the next 4, 5, 6 months, right? And that is what the board has been kind of focused on. That is what the management team has been focused on. Now, even in some of the other businesses that I've been involved in, and which is probably some of the difference that you are seeing when you are talking, or when I talk to my peer groups in many other sort of similar businesses, and what I am saying is because of two reasons. One, most people actually let me start off by saying something which is which is not going to sound good, and a lot of people are going to get uncomfortable with it. But the fact is actually, in a lot of businesses, Mitali, the crisis is not because of the COVID challenge. The COVID challenge has only exposed the weaknesses of those businesses, and it's important to understand that, and it's important for business leaders all around to acknowledge that. you know I have actually, probably the reason that you see that sort of strain of optimism, or the fact that I don't get phased by this so easily, is that I started an airline when within 3 years of 9/11. I've lived through SARS. I've lived through the economic crisis of 2010. I've lived through India slowing down. So I have a fair amount of practical, cautious optimism that India as an emerging economy behaves in a certain way. The second thing is, when times are good, every donkey looks like a horse. It's only when times are bad that your inefficiencies get magnified. Now, the reason I say that is that, therefore, if you had a situation, or if you are part of a business that was already in deep trouble, right, then it is very difficult to see that 4, 5, 6 month runway. You're absolutely in survival mode, whether you can survive the next 2 months, and I'll talk about that in just a bit. But the reason some of my peers are in that sort of a situation is either that their own balance sheets are very, very weak, and I'm talking about hotels, airlines, restaurants, that whole space, or their product or service was so high priced that it depended a lot on high discretionary spending. That is going to undergo a tremendous amount of stress, because while I said, and I do believe, that travel, hospitality, all of this is a fundamental need, there is another fundamental need in a crisis situation like this, which is the need to conserve cash. So where those two lines meet is where there is an affordable product or service which is of high quality. Therefore, anybody in this line of business who's confident of being able to, whenever you're allowed to offer it, is confident of being able to offer that product or service, whether it's a hotel room or a restaurant meal, or for that matter, an airline seat, at a more affordable price than everybody else, is bound to lead the recovery and is bound to get the most amount of benefit out of this. The same thing happened in the airline that I used to run for so many years. It's during the 2009, 10, 11 crisis, when other airlines were hemorrhaging and one went out of business, the others shrank. It is Indigo which expanded at a tremendous pace because of the lower cost structure and the affordable price point. Now, there is one missing link. The one missing link is that during this, let's say, 2 months to 6 months time frame, how do you create liquidity, right? And there, I think there are some structural changes that need to happen. Fortunately, a lot of the stuff that I've been talking about over the last 5 weeks, I mean, we saw shades of that in the finance minister's announcement day before yesterday. But in that MSME, SME sector, a lot will still depend on execution and implementation. I'll give you an example. There is a business that I'm deeply involved in, where I'm on the global advisory board. It's a business called Credit Enabled, and which is a tech-driven fintech business, which is not a loan provider. We are not a lender, but we are the platform which connects borrowers to lenders like banks and NBFCs. There has been an 80% jump in loan requests in the past 30 days. Right? And these are relatively small ticket size loans, right, which are focused on that MSME sector. On the other side, RBI is telling banks and NBFCs to go out there and pump liquidity into the market. What are they doing? Instead of lending, they're taking that money and putting it back with the Reserve Bank at a lower interest rate. The reason for that is that the pipe is really clogged. The pipe is clogged because on one side, the borrower, running a small business is overburdened with these KYC norms and all kinds of things, and he anyway cannot come out of his house. The lender's front end and capacity to deal with or process all of these requests is completely choked. Now that's where a whole new way of of kind of solving it by using machine learning, by using simpler KYC norms, etc., will suddenly unlock that liquidity.
Yeah. So this works, of course, for the MSME space, Aditya. I want to focus a little bit more on the
On the
startup
startups, yeah.
business, which has seen some far bigger changes. For example, the changes that were announced in FDI from China, and that includes Hong Kong. For yourself as well, SoftBank has been a big investor. It is dealing with its own very, very large losses, something it hasn't seen in 15 years. Is that going to be a big sort of game changer for the startup universe, accessing funds, the duration that it's taking to access funds, finding a via route into getting money when they need it quite urgently, it seems?
So again, maybe there are three probably aspects to that question. The very first that I am at least seeing, whether it is in the various, startups that I'm involved in or I have invested in as a personal investor, or for that matter, the portfolio companies where I'm part of the advisory board and things like that, and that's maybe 30, 40, 50 companies across. The one consistent theme is that nobody is trying to raise funds at the moment, for the simple reason that most founders see this as a time when the valuations will be not what they had expected, maybe a few months ago, or not what they see maybe 6 months, 10 months down the line, right? So that's item number one. The second is, I think most people are reaching back to their current cap table and asking for either friendly debt or some kind of a bridge financing to make sure that they have the cash runway. The third trend that I'm seeing is boards, investors have got far more involved in working with the management teams and the founders and pulling up their sleeves and saying, this is how you kind of manage your variable cost, this is how you manage your sharpen your focus, and so on and so forth. As far as OYO is concerned, given our current cash position, we don't see that stress. We don't see that stress to go out and raise more funding at the moment. Of course, finally the board decides what it will be, and I should not, as one member of the board, speak. But at the moment, from whatever we are doing, I think we are comfortable to a certain point, and whatever we have done. The last bit about the press note. If I zoom up and I see, from a government policy point of view, I think what the government has done, it seems at least, and this is my personal view, it seems basically it is to make sure that you're not raided by companies out of China. That's really what it kind of boils down to when you read the press note. And I think that was something that they had to do out of necessity the moment the HDFC transaction happened. But I have also seen that there's a fair amount of interest from sovereign funds. There's a fair amount of interest in both in Europe as well as in the Middle East. There are large, hedge funds, etc., who are becoming very interested in trying to balance out their exposure to China and look at India as an opportunity for investment, or for that matter, looking at great prized assets where fundamentally the business was in the right business but is under a particular stress at the moment. I think there'll be a lot of action on the NCLT side also, for instance. So yeah. So I don't see this as a massive problem, at the moment.
Sure. The reason that press note is doubly confusing to Aditya is because for the HDFC sale itself, it's FII, not FDI. So I cannot know who it is we're ring fencing. But I want to understand what your sense is of what the future of many of these startups is. There is some data which reveals that perhaps more than 50% of them have less than 1 month of cash flow or, really a driveway left. There is another point of view which says that if this lockdown extends for even a little bit longer, we're looking at least 25% of them completely shutting shop. How dire would you say the situation is? Are we looking at a complete cash crunch, which, really forces them to hunker down, as you said, or are we looking at shutdowns which are imminent in the startup world?
The answer to that is very layered. The reason for that is there are if you look at companies which were in, let's say, in pharma or high tech, in higher tech research, let's say robotics, etc., and there are quite a few startups out of India in that space. They are actually getting a lot of great attention, and they are actually getting asked if they want more funds. So that is one category. There is another where they were highly reliant, or and just naturally the business was such that it was a very digital, online, tech driven delivery business. For example, whether they relied highly on a consumer product business which was relying highly on, let's say, on e-commerce platforms, or for that matter, let's say online education, etc. For them, this is like their demonetization moment. This is like the world has suddenly changed, and life is great. Even in consumer products, staples, which in the Indian startups have struggled for the longest time, because you just could not break through that kirana, modern trade, barrier. That has dramatically changed. I know several consumer product companies which have broken even in the month of March and April, because suddenly, their distribution cost came down and they were able to focus online. Because online distribution cost, even though it is expensive, it is much better than what it was trying to kind of breach through the walls that large FMCG companies had created over like 30, 40, 50 years. The but the other is that now there are some which are kind of stuck, right? The ones which still have for some reason a very large offline play. There could be retail stores, for instance, right? Or for that matter, restaurants, or some F&B businesses such as that, or even cloud kitchen businesses where there is still a fair amount of suspicion around sanitization and cleanliness and hygiene, etc. So there is that piece that is definitely going to undergo stress. And what I keep reminding back is there were a lot of startups or early stage companies, as I call them, in sort of high end products. That is definitely a luxury or high end, or this is definitely the higher end of the spectrum. But if there was a business which was trying to solve for a fundamental need of the consumer, I think there are enough investors who are looking to back them up, because it is easy for them to pivot and go towards a online delivery system. The last thing that I'll say is that even when you look at e-commerce platforms, what you're seeing is there's an increased heightened amount of competition there. Both logistics companies as well as the smaller e-commerce players are eating into the pie of the bigger ones, which is ultimately creating competition, and the cost of customer acquisition is gradually beginning to come down for a lot of these consumer product companies. Because earlier, Mitali, the problem was that if you were in consumer products, it was virtually impossible beyond a certain point for you to breach through the walls of these big FMCG companies. That has undergone a dramatic change in the last 4 to 6 weeks.
Which brings us to your former industry, which has really been hemorrhaging, Aditya. And of course, as you pointed to China over here as well, there's more optimism from those figures. I think domestic capacity for Chinese airlines is 75% of what they had in Jan. But the problem is that this industry, at least in India, has been suffering for many, many quarters now. What do you think the new phase is going to look like, both in terms of fleet rationalization, in terms of staff rationalization? How much are they going to have to squeeze down before they can start again?
There, of course, Mitali, there are only a few players. First of all, there are only, like, let's say, to speak of about five players. Now, in those five players, you've got to keep Air India in a separate bucket because you have the government of India as the shareholder, right?
Mhm.
And typically the government has been pumping in about $1 billion of cash every year, and for the past, I don't know, more than a decade, right? So I do not see much of a change in either the capacity or the way Air India has operated, for a while, unless there is a some dramatic difference in view, which at least I have not seen in the last 15-20 years. Now let's come to the private players. The private players, there is only one airline which has a very strong balance sheet, and I think, give or take, I think Indigo has about $1 billion of cash on its balance sheet, right? Which will, I think, reasonably see them through this whole year, right? And on the other hand, some of the others are under tremendous stress because of already debts that they had, and at least the two older private players certainly have a lot of debt on their books and they are under financial stress. And then there is the two new ones, which is relatively new ones like AirAsia and Vistara. So I am not, and this is without any knowledge, without having spoken to the Indigo management team or anything of that sort, just having run that airline for a fairly long amount of time, for more than a decade. I know that Indigo is in a very, very strong position, that if they hunker down and make sure that they run their business as sharply as they normally do, they're going to see through the year and they're going to have a much bigger year next year. The airlines which are going to go under stress were already under stress, but they have a very, very small market share. When you add up their market share, it's a very, very small market share, probably either in single digits or in the early teens. So it's not going to create a big impact on the market, right? The third is that the airline business is a highly variable cost business. You see, it's not like you have to run a massive factory line. So if you have 300 airplanes, you can easily pull out 100 airplanes in an hour's notice, and a lot of the variable cost starts coming down. Fuel, which is close to 50% of the cost, goes down. Landing navigation charges you do not pay. A lot of the sector pay, which is the variable component, which is a pretty high amount for pilots and flight attendants, you do not pay, right? So and in any case, in this kind of a global aircraft market, I wouldn't be surprised if many leases got renegotiated and so on and so forth, right? So therefore, if you run that smartly, and if you're not already burdened with some sins of the past, you have a very, very strong position to actually manage through this crisis.
What's your sense, Aditya, at this point on what kind of per month losses the aviation industry must be facing in India?
So when you look at these IATA figures, right? The per month losses probably is anywhere in the few $100 million. But that is that I don't hang my hat on those numbers, because that's pulling the number of what the peak capacity was. Like I said, the moment you bring down that peak capacity and you're not flying, a lot of the costs you're not spending at all. So actually, because of the high variable cost nature of the business, you actually do not see such a big impact.
That's interesting because CRISIL actually estimates that the revenue loss to the Indian aviation industry could be between $1 to $1.5 billion per
But
month. Would you say
that's
that's
where the trick.
overstated fact?
That's where the trick is. The trick is that they are talking about revenue, and I'm talking about actual cash burn. How
So
does
what?
it matter? Because if let's say, if you if you lose that revenue, but you're also not spending three-fourths of the cash in terms of costs, right? The actual losses are much, much lower.
So why is the aviation industry pushing the government for some kind of specific package or bailout package, helping out with salaries? Is the aviation industry crying wolf, or is there genuinely a problem?
Again, in the aviation industry, and this is very this has been the standard thing for the past 15 years. There is Indigo, and then there is the rest of the aviation industry. It's always been like that. Indigo will never ask for a bailout. Indigo will never ask for a handout and things like that, because they believe that, and I'm not speaking for the management team right now, I'm just generally giving an opinion. The general belief in that organization is, if you're running your business well, then market should determine, right? Whereas the rest of the industry, which has always been loss making and always has operated on high cost structures and so on and so forth, is constantly looking for a bailout. Now, having said that, there is one difference. The one difference in this scenario, which is different from anything that we have seen in the past, is that the airplanes have been sitting on ground, so there is zero revenue. So you're still paying the lease rentals, etc. So I think what the reasonable ask is that is basically two things. One is fuel, which is the biggest component of the cost. When crude oil prices are at the rock bottom as they are today, why should ATF in India continue to be as expensive? Right? So I think that is a very, very reasonable ask. Right? The second is that Airports Authority of India, which is a government entity and which is a very well-off, entity, that can definitely provide a fair amount of relief for the next about a year or so, right? So moment these two costs go down, I think airlines will be able to will be able to kind of, navigate through these turbulent skies in a much better fashion than many other places. And there is one other reason why I believe that fuel prices and the taxes on fuel prices need to be corrected. Because the same airlines, whether it is Air India or Indigo or SpiceJet or Vistara or anybody, have to also compete with international carriers who are getting the benefit of that rock bottom fuel price. So it is a very, very, very gradient sort of playing field. And to that extent, you've got to bring the playing field to a more level.
Even as we speak, Aditya, Jet Airways has now launched a fourth search for a buyer. Air India was in the process of beginning its, client calls, etc. How do you think that's going to shape up for both of them? I know they're very different animals, but given what
Yeah,
there's, the recovery you see, what do you think their
I
chances are?
I think, look, Jet Airways is, I think, in the NCLT and is in the NCLT, and I know there are some buyers looking at it. Uh, Under the right conditions, I think this may be a very interesting buy for somebody. And this may be a, provided, of course, the debt is taken away, and they continue to have the traffic rights and the landing slots. I think this would be a very interesting buy. Because that's where the value sits. The value sits in the landing slots and the traffic rights. As far as Air India is concerned, that's a much bigger animal. And like I had, I was part of the team which had bid for Air India, 2 years ago, if you recall, and we were the only bidders. But we basically said that you please separate out the domestic and the international. The international is where your biggest value lies, and that's going to be a much easier part of the business to find a buyer for. And then the domestic, can either shrink or can run at a much smaller level. And the reason I say that is, unlike what happened 10 years ago, now with Air India's market share as being fairly small, even if that shrinks a little bit further, you're not going to see an adverse impact on fares, and you're not going to see an adverse impact on the network. So I think it's a very, if one could kind of take that sort of a tactical view on structuring that transaction, I think there could be an opportunity.
One final question, which I know I'm asking you to stick your neck out to, Aditya, but given your experience, especially in parts of Asia, for both those industries, travel and tourism and aviation specifically, how many months of pain ahead you think before they can start the process of recovery?
You know, there are two parts of Asia that I'll talk about.
Yeah.
One will be markets which have a massive domestic feed, or there is a massive domestic consumption economy. There, I would say 4 months, 5 months, and you will begin to start seeing this sort of at least this gradual crawl out of the survival mode. The markets which are very, very small, and they depended a lot on either international traffic coming in or international traffic going through, they are definitely going to see a much longer session of pain, maybe at least a year and a half, because that depends a lot. Both hotels and airlines depends on long haul traffic connecting through, and if that long haul traffic is not there, then there's no domestic traffic or there's no domestic consumption to kind of support those hotels and airlines.
Super. Very good speaking with you, Aditya. Thank you very
my,
much for
my
joining.
pleasure. Thank you for having me here, and wish everybody, of course, safe health and make the most out of the lockdown.
Inshallah, so we hope.
Thank
Thank
you. Thank you.